Hi everyone, it's Marissa here from Rise High and
Lachlan Turner from Turner Real Estate.
And we are here to bring you the Adelaide property quarterly market update. It's so strange to think that 3 months have passed since the last time we did this, Lachie, isn't it?
Yeah, time goes very, very quickly for all of us, I think, Marissa, and but you've got to pack it in.
Yes, that's right. So already in April 2024, so we're reviewing the last quarter up until the end of March. So what is going on with property, Lachie? What are we seeing in the market?
Well, for buyers, it's not so great because Adelaide is the strongest market nationally. Actually had a 13% year-on-year increase, and that's really because the supply of property available is still very low, and there's lots of buyers. Immigration is now, I think, 550,000 people coming into the country, so it is a bit of a chronic issue, and people do love Adelaide. So it's hard to believe the rents. The median rent in Adelaide is actually now higher than Melbourne as well. So
wow, it's just so strange to see what's happened, what's transpired over the last 18 months, 2 years, and it just seems to be. It's hard to see how this is going to end, isn't it? Like, it's just hard to see where it's going to start to stabilise. I mean, we do expect that at some point it will start to stabilise, but as you said, there's still a major shift between demand and supply. There's not enough supply, so it's super great for property owners.
Yeah. Not
so great for people that are trying to buy.
Yes.
What are your thoughts in regards to how this is going to transpire over the coming months, quarters? Over the coming 12 months, where are you sort of seeing things? Is there any sort of slowdown or any shift towards more of a stabilisation, or is it just still going?
I think some good news for renters in terms of becoming a bit more stable is that we've certainly seen the market start to even out a little bit there in rent yields. I think we've had our rise, and there won't be too much more in the market, I don't think. I think it has certainly reached its limit. In fact, properties that are sort of $600 per week in rent or more are certainly on the market 3 to 5 weeks, we're finding. We manage about 4,000 properties at Turner, so we do have a wonderful insight into really where the rental market is, so that's good. The most in-demand properties would be for rented sort of between $400 and $550 per week, and we're still getting a number of applications on those, but unfortunately the quality of the applications are very low. Sometimes we're getting up to 12, and it's a lot of work for our property managers because they've got a lot of data and finances to look at, and some of them you actually wouldn't go near any of them, would you believe? So the quality is not great.
Would you say that there's a much higher demand from tenants at that lower price point?
There is, yeah.
Is that also the same for purchasing as well? Like, you finding that the properties sort of in the lower price point below the median price range are having more buyers being attracted to them rather than the higher end properties?
Yeah, well, we're certainly seeing that in the unit market. I mean, the median rent value now in Adelaide is $775,000. So the units, which are historically and are growing in value as well, but 300,000 to 600,000, we're actually seeing a lot of interest in those properties. We've actually just launched one on Montague Road in Newton, and that was just on turnerrealestate.com.au. Haven't even uploaded to the major portals. We've had 40 groups through that property and 8 offers and 70,000 above the price range, and that one's sitting around that $550,000 to $600,000 price range. So there's huge interest at that level, and the value of units is actually increasing quite a fair bit. But we are seeing interest right across the board. I mean, anything from 4 up to sort of 1.2 to 1.5 million is, I think, a very popular band.
I think, with prices going up and obviously interest rates going up, people have had to adjust their expectations of what type of dwelling they can afford. And, perhaps that has driven purchases towards units more in this current market than it has traditionally. Do you see that?
Well, I think so, Marissa. And the thing with a unit is that it's a value that they offer. And if you want to live in inner city or established areas that are high value, there's only so many units in those areas. And if you want to live there, that is really the only option under $1 million. So that's what's happening.
Yes.
I think, unfortunately, for the buying market, and these aren't owners, these are people wanting to buy property, obviously, is that the market, it doesn't look like it's going to get any easier. In fact, you would know this. I think there's talk of a potential, depends on inflation, but a potential interest rate drop later this year, which will only spur on the values of properties.
Yeah, I mean, a lot of the economists do believe that we've sort of hit the peak with interest rates because inflation is starting to stabilise. But yes, they are predicting an interest rate drop later in the year, but there's so many factors that can in fact affect that. And like you said, we've still got the, people coming in, the migration. I'm also seeing, we're also seeing here a lot of interest in Adelaide property market from interstate buyers,
yes,
Sydney buyers, Melbourne buyers, Queensland buyers wanting to buy in SA because of our rental yields and our lower price points. Even though they are rising, they're still affordable. So it's going to be really interesting to see how it plays out. The other interesting part about interest rates is that now the Reserve Bank of Australia are only going to be meeting 8 times a year. So previously they were meeting monthly. Now they're only meeting 8 times a year, which means that there's less opportunity for rates to move, which is kind of a good thing in a way because it gives us a bit more stabilisation and a bit more time between meetings. But it does mean that they're going to be meeting less frequently. So that will be interesting to see how that plays out with the next Reserve Bank meeting on the 7th of May.
Yeah, no, absolutely it will be. Yeah.
So what advice do you have for buyers right now? What should they be doing to put their best foot forward and to try and secure the home that they want to buy or the investment property that they want to buy?
Well, I think the aim really is just to get into the market, and we've given these sort of tips sort of in the past, but I think don't necessarily just focus on the property that you think you want to live in. Just get in the market, which might mean buying further out of the city, either west, north, south or whatever.
Yes.
But just get in the market. Obviously you must have your finance all sorted out. You can't do a single thing until you probably have a chat to the team here at Rise High and get that sorted out. And then I think after that you just got to go and start looking. But there is a big move towards agencies not just advertising properties on the major portals like realestate.com.au. A lot of agencies like Turner, we've got 7 or 8 now currently sitting on what we call Turner Exclusive, which is just on turnerrealestate.com.au, and we always match it to the buyers that we've got on our system first and market to the people that visit our website. So make sure you do that as well, because there's a tendency now where a lot of agencies are just going on their websites, even if they just do that first for 2 or 3 days or maybe a week, and then they'll upload to the major portals. The reason we're kind of forced to do that, and it's not great for the customer, it's better to just go to one spot and see them all, but is that when we sit in front of sellers, they often like to see whether some money can be saved and whether they can reduce the impact of opens and every man and his dog seeing a property. So we offer that as a solution, and there are more properties just selling on agency websites. Turner's one of them, and probably the other major agencies around, independent agencies are doing those sort of things. So register with the key ones in your area, as well as looking at realestate.com.au. Get your finance in order, and again, just broaden your horizon of where you are purchasing. I mean, it's quite good to rent, but as long as you're in the property market with a property, I think that's another sort of...
Become a rentvestor.
A rentvestor, yeah, and they're becoming pretty common, and that's a great way to do it.
It's definitely better than not getting into the market at all. And what advice would you have for people that are considering selling? Is now the right time, or should they wait? Will they get more if they wait? What factors should they consider if they're looking at selling? Yeah,
well, I've been doing this now for 20 years, and I must admit, whenever I sort of talk to people about this, I always talk about the now. We talk about the macro environment, and the macro is what's going on in the world, what's going on with interest rates, not so much whether the Crows are playing or what season it is, which are more micro factors. So I always look at the future and say, look, it does look strong for property owners. Like if you sell now or you held it, it probably wouldn't matter. I think the market is strong and it will continue to be. I don't see too much downside risk in not selling now. I think like with an interest rate drop, it may even sort of keep the market going a bit more. So, I think for a seller though is obviously just the general rules, as always, apart from the market, is to make sure they present their property beautifully. It's just so important to do that. You just want a buyer to walk through and just see it and just go, oh, I could live here. I might want to change like a wall colour or upgrade the kitchen at one stage, but I don't see any maintenance issues or things that are going to worry me. So get that presentation right, market it widely. I mean, you certainly start by matching on agents' portals and things like that, but generally go to the major portals, build your competition, price it accurately. A lot of people that we hear about in this market think because it's a strong market, they hear it's a strong market, they can just pitch any old price and someone will pay it. That's not true. Buyers are still very, very discerning. So you've got to pick your price. If you do that, you will build the competition and it will sell within a 2 or 3 week time frame. So you can still get yourself in trouble as a seller if you're above market value.
It's been a really interesting market though, because like you said, properties that are priced well are selling really quickly. We've also had some experience with some of our clients that have tried to go to market to sell and it hasn't sold as, they haven't had offers, or it's a really interesting market because you just assume that everything right now will sell so quickly. And yet recently we've had some experience with some clients that have had a bit of struggle actually getting people to the opens and selling. So where do you see that happening, and what can people do if they're in that situation? They've signed up to an agent, it's not quite working the way that they want it to work, their expectations aren't being met around receiving offers or purchase price. What advice would you have for a seller in that situation?
Look, in this market, there really shouldn't be an issue selling a property, and if it's not, it's price.
Okay.
And sometimes the aspirations of the seller are above market value, and people think it's the agent, but often it's dictated by the seller. So I think you've really got to pick where the buyers see value, pitch your property around that level right at the beginning of the campaign, so that the first impression is one of value. You build your competition right at the beginning, and then you do get that outcome. There are some sellers, as I just alluded to, that just think, well, it's just an incredible market, I'll just put this price on it and it'll sell. But buyers are savvy, they are always looking for value, just like the owners are looking for value in selling.
Yes.
And if it is struggling, it's generally because of pricing. So I think if you're already maybe started a bit high, you just probably do need to reassess that pricing issue straight away. Other factors are just like there might be limited marketing, not enough's being done. It could be that there is like a structural problem that is a real sticking point, and you just can't get a buyer past that, which is affecting the value. There's various little things, but generally it all comes down to the value.
And do you find that if the property is on the market for a little bit longer than those sort of 2 to 3 weeks that you said that most properties are just being snapped up, if it is on the market for a little bit longer, does it actually make it harder to sell?
Well, it actually does, Marissa. And look, our rule of thumb at Turner is that if it's been on the market for 30 days or longer, and like this is like first day launched online, a full 4 weeks on the market. If you're not selling in the like generally after 30 days, you start unfortunately selling at a bit of a discount because you've had your big wave of interest, everyone's gone, you've lost a competitive situation that you're hoping for, you're dealing with buyers a bit more one-on-one, and you might get an inquiry once every few days or something, and then the table turns and it sort of favours the buyer, and it's much harder for us to negotiate for clients when we get to that point. So so really, I mean, you should just get all the pricing right, all the presentation right, all the marketing right, and then boom, you launch, and then you build your competition from there. I think the psychology for sellers is that if they pitch under where they ultimately want it to be, that's what they're going to sell it for. But competition will always drive a price to the level that it will always naturally go to.
Yes. And what do you see as the supply issue? Like, what do you see as the resolution to the supply issue that we currently have, Lachie? Because obviously there's one part of it where people need to just put up their houses for sale, but there is another part of it where, the government's got that target of 1.2 million homes within the next 5 years, but that's supposed to be building approvals of something like 20,000 a month, and they're currently sitting at about 12,000 a month building approvals. So the government's nowhere near their dwelling approval targets that they need to. So that's, potentially going to help ease supply a little bit, but nowhere near where the targets are. I guess with your expertise in the market, what do you see as the solution to the supply problem moving forward, and how do we get to more of a balance?
Well, I think you've hit the nail on the head. Basically, the country needs to build $240,000 a year for 10 years just to fulfil the demand that is out there. So it is in fact a chronic issue if you look at it that way, because it will just take time. I think local governments and the councils, both local and nationally, just need to aggressively open up land and build more. But now we've got an issue with tradespeople as well. There's a bit of an undersupply of trades.
Construction costs.
And construction costs and so on. There has been a lot of talk, and look, I am saying this off the top of my head, but there's been a lot of talk of negative gearing and things like that. But in fact, and I'm not for or against it, but there could be huge issues if that is abolished. I know the Greens are trying to push that pretty hard, but generally what happens is that it actually rises the value of properties because, you know, for all the reasons of not having it around. So that isn't really a solution either.
You know, if things like negative gearing were removed or, you know, less attractive for investors, then what that actually does is that means that less properties are available for rent.
There's even less investors in the market.
Which push up the rental yield.
As well. And things like the first homeowners grant actually made property values more expensive because people just simply use the grant, just pay that to the owner of the property. So negatively gearing will probably put the values up and reduce the pool of investment properties available for renters, which will make the whole situation worse. So I don't know that that's a solution. I think if everyone goes full circle, is more land and more houses built as soon as possible. In the meantime, we're just going to muddle our way through, and that's what's going to keep rental yields where they are. I think, as I said, they've stabilised, but I think the property prices will stay up as well, if not continue to climb a little bit each year until we actually see an outcome, which could be 5 years away.
And do you see Adelaide continue to outperform the rest of the nation moving forward, or to continue to be a strong market, or do you think that other markets might sort of step up and, you know, where are you sort of?
Well, I think there's huge. Yeah, I think there's huge infrastructure issues in the big cities. I think Brisbane, Sydney, and Melbourne are growing very, very quickly, and they're very busy. Their roads are clogged. These property values over there are exceptionally high. So I think at the moment Adelaide is still pretty much the obvious choice in terms of livability, the ease to be able to get around, you know, and the relative affordability compared to those capital cities. So I think the Adelaide market will continue to be quite strong. We actually want to be careful as Adelaideans. We don't want to change the dynamic of our beautiful city too much. We don't want it to turn into a Melbourne. So we do need to be a little bit careful and just make sure the growth is even and consistent and sustainable. And I don't think it's sustainable in some of those other capital cities.
Well, that wraps up our quarterly market update for the March quarter 2024. Thank you so much for tuning in, and we'll see you again next quarter when we'll revisit this all again. Thanks so much, Lachie, for joining us, and thanks for tuning in. Bye.
Thanks for having me, Marissa.